Welcome to our special presentation this week. Today we've got something special for you. We recently had the pleasure of speaking with Bruce, a 2017 graduate of our Options Paycheck course. Over the last 3.5 years, he has seen tremendous results. He was able to grow his account from $100,000 to $497,000. He did have some ups and downs, but he learned from his mistakes. We hopped on a video conference call with him, and he shared his journey with us and what he's doing to get his results. Today, you're going to learn what he did. Bruce is 63 years old, married with 2 kids, 2 granddaughters, and another grandson due next week. He was an entrepreneur all his life, sold his business in 2007, and retired. After he retired, he was looking for something to do to occupy all his free time. So that's when he started to get into investing. After he got into investing, he ran into some problems and struggles. Let's hear it from Bruce himself.
During my business career, you always have those people calling wanting to sell you stocks, get you into something, and I dabbled a little bit, but I spent most of my time with my business and poured all the money back in. Upon retiring, I was looking for something to do to occupy all my free time besides I'm an avid golfer. And I started dabbling in stocks, tended to buy high, sell low on emotion, lose money, nothing significant. Got frustrated, and one day I was on my Schwab account, and they had this thing on options, and I went in, and they have option strategies that basically suggest different types of trades. And I heard about options, but didn't know anything about them, so I thought, well, I'm going to give it a try, and proceeded to take advantage of all of their suggestions, lose about $10,000 to $15,000 in a matter of a few months. Never had a winning trade through that concept. Wow. So yeah, in my previous stock trading, it bothered me a lot taking losses, and it wasn't always so much the money, as I'm a very A-type personality, competitive person, and I hate taking any kind of loss, period. And I would tend to ride things out too far, which would cause, a lot of sleepless nights, waking up early, waiting to see what the market's going to do. Stressful weekends, because if you keep some of that stuff on a Friday and you have no idea what's going to happen over the weekend, it's very stressful. Now, by following the system, it kind of takes all of that out of play. So it's strictly a follow the rules, and that's what I tell people on Facebook. And that's what I've been saying lately in my posts, just follow the rules, follow the rules. I'm a believer, in that. And I sleep very comfortably now, but it's a good peace of mind when you have a system that works.
You heard Bruce mention the system and to follow the rules of the system. The system we taught Bruce is an income system, which is built on the mindset of placing trades that allow you to win even if you're wrong. Winning even if you're wrong is the key to making consistent monthly income in the stock market. Think about it this way. Are you wrong more than you're right? Are you maybe 50-50 on your trades? If so, stop trying to be right and use a system that allows you to win even if you're wrong. Right from the start, some of the stress is already removed. A standard trade you might do looks like this. You find a stock that you like and you buy some shares. If it goes up, you win. If it doesn't, you lose. Basically, you have a 50-50 shot at winning. Instead of doing it that way, we taught Bruce one little mindset shift, and he began placing income trades. Instead of needing the stock to go in your direction, you can pick a price which basically says, as long as the stock doesn't go down to here, I can make money. Think about that. If the stock goes up, you win. If the stock goes sideways, you win. The stock can even come down a little and you can still win. You're able to win even if you're wrong. In fact, here's what Bruce said.
From a numbers standpoint, I can share with you, and it's kind of interesting. Year to date, right now I have a 74% win rate. with an average win of $1,900, average loss of $4,500. The average losses are higher because of the recent hits on the SPX trades. Interestingly enough, I've done 318 trades this year, and of those, 225 have been SPX trades. The others are the stocks. I love the SPX system, and I got to say, while I'm an intelligent person and a numbers person, I'm not a highly technical person. So while a lot of times we spend a lot of time in classes or on conversations on Facebook about the technicalities, all of the different things you can look at, I just follow the simple system. If the dew is up, I place the trade. I follow the rules. I don't worry a whole lot about, no offense, Ron, but higher highs, lower lows, the bars. I try to keep it simple. I hope to become as technical as some of the other traders are in the coming years, but I've got something that's working right now, and I really enjoy it.
The simple system Bruce referred to is actually a simplified version of our options paycheck system. Let's take a closer look. We call the simplified version the SPX paycheck system, and you'll see why in a moment. It's a 5-step system which begins with market direction. We look at one market timing signal and it's either up or down. You just heard Bruce mention it. Here at VectorVest, we have a great timing signal called the DEW. If it's up, we place a bullish trade. If it's down, we place a bearish trade. Instead of looking at all of the stocks for a possible trade, we keep it simple and only look at the SPX, which is the index that tracks the S&P 500. When it comes to option selection, we only look at 2 types of trades. If the market direction is up, we use a bull put. When the market direction is down, we use a bear call. When it comes to options, there's a wide variety of trades you could do. Here's a list to give you an idea. Well, to keep things simple, you will narrow that list to just 2. One is called a bull put spread, and the other is called a bear call spread. Since Bruce primarily placed bull put trades, let's take a look at that one. When you're bullish, to keep things simple, you focus on one trade called a bull put credit spread. Now don't get freaked out because the term might seem scary. Look at each word individually. Bull means you're bullish, put means it uses puts, credit means you will receive a credit when you place the trade. In other words, you receive money instead of paying money, and spread means you will use 2 different strike prices. Let's look at an example. Here's a look at the overall market in late 2019 and early 2020. In late March, the market bottomed, and VectorVest's DEW market timing signal generated an up call on April 6th. That was when we started to be bullish. Let's take a look at the bullish trade that we did on April 27th. The first thing you know is you're only going to be focusing on one trade type, bull put credit spreads. You're also going to narrow your selection down to just the SPX index. A bull put spread means you sell one put and you buy a put below it as insurance to keep your risk low. We'll talk about how to pick those strikes in just a minute. While we're here, let's actually see how this one worked out for us. The S&P rose, and in 2 days, the trade closed and resulted in a nice $1,500 paycheck. Keep in mind, they don't all close that quickly. Typically, they'll close in about 7 to 11 days. The main thing to understand right now is that you, just like Bruce, can take all of the guesswork out of trading options and follow a simple system. When it comes to trade setup, there are a couple of main things to look at. Primarily, strike price and expiration. Let's first look at expiration. Options can have many different choices when it comes to expiration dates. When you go to your broker, there can be a lot of different expirations to choose from. The way that we narrow that down and keep things simple is by understanding this concept. You want to put time on your side. One of the mistakes that option buyers make is that they have an expiration date that is too close. They do that because those options are cheap. Those options are like meat on the discount rack. They're cheap for a reason, because they're going to go bad very soon. So you're not going to buy them. You will be the one who sells those options. Here you can see what happens to the price of an option in relation to the number of days until expiration. Notice over 180 days, it took over 120 days to lose half of the option's value. In the last 45 days, the price really drops off. A mistake buyers make is that they buy an option with less than 45 days left, and time decay eats away their possible profits each day. Instead, you're going to sell options with an expiration date in that area. Remember, you are the seller, so if the price of the option declines after you sell it, that's good for you. Each day that goes by, you're keeping more and more of the premium that you collected at the start. Then you could buy it back at a cheaper price, and that difference is how you profit on the trade. Next, you want to select your strike price. Options have a lot of different strike prices. If you don't have a way to narrow your selection, you're left with dozens of choices when it comes to select your strike price. You want to narrow that down. The way you do that is by understanding the concept that we are sellers and we want to pick a strike that will be avoided. We don't want the price of the stock, in our case the SPX index, we don't want it to get to that strike price. So we want to select strikes that are far enough away that they have a very low probability of getting hit. But we have to compromise a little bit. We can't set it too far away because we want to collect premium, and the premium gets lower and lower the farther away you go. Here's an example. Do you remember this bull put that we looked at just a moment ago? We got a signal the market was moving up, so we wanted to pick strike prices below the current price of the SPX. And we wanted to choose a strike price that had little chance of getting hit. Let me just say it another way. We think the market is going up. We don't think the market is going down. But just in case, we want to select a strike price far enough below the current price so that it has little probability of getting hit, just in case the market changes direction. This allows the S&P to go up, go sideways, and even come down a little, and you could still be profitable on the trade. Here's the concept. This blue area shows a thing called probability. Without getting into all of the formulas and all the details, it shows where the price has a 68% chance of being in the future. You will choose your strike prices towards the edges of that area. Looking at the trade that we did, notice the strike price was at the lower half, which means it has much less than a 50% chance of getting hit. That means you have a greater than 50% chance of winning. And that's what you want for your income trades. The final step is trade management. We didn't have time today to get into all the trade management, but we do have a strategic trade management plan that has simple rules to take profits and to manage a trade if it goes against you. This is the main system Bruce uses. Let's hear about his results, and then Bruce will share the main lesson that he learned over the last 3.5 years. Listen carefully to what Bruce says, because he had some ups and downs, and it's important that you hear how he reacted to the downs.
And in the first year, I really shocked myself. I made $203,000 the first year.
Nice.
That was in 2017. I started with $100,000 to seed my account. And I thought, I actually used the term that came back to bite me by saying, this is like taking candy from a baby. And went into 2018 thinking, man, this is going to be a great year because I only had 9 months. I started in April of 2017. Thought it's going to be a great year and took a lot of risks thinking, if I can do this the way I did, if I just take a few more risks, like not selling when you hit the short strike, holding it, figure it's going to come back. So losses started to mound, and I ended up losing $43,000 in 2018, but yet thinking I was a lot smarter options trader. And 2018 was a little bit rocky. The economy was a little bit rocky. And so we went forward into 2019, and that's when the term really hit me. I love the Facebook groups and the interaction with other people, and you see a lot of cautious people and stuff. And the one thing that happened that changed my trading experience was to follow the rules. So regardless of what happens now, I use the plan. I have it laid out. I follow the rules. When it hits the short strike, as hard as it is, I sell the trade. I hate taking any kind of loss. It's not in my nature, and sometimes I feel like I could afford to ride it out, but every time I do, it really comes back, to haunt me. And I turned it around in 2019, made $160,200 last year. So then I've signed up for more courses. I've really, gotten involved. But now in this year, as rocky as the market has been, I found by just following those rules, regardless, and you see me preach that to others on Facebook, to follow the rules, follow the rules. I turned it around, and in a rocky market, ended up about $77,000 to the positive year to date this year. And that's including taking a pretty good haircut over the last 6 weeks of what I think is one of the rockiest. In the last 3 years that I've been doing this, it's been probably the toughest last 6 weeks, that I've experienced. So I follow the rules. Because I'm playing with house money now, I've managed my account is plus $397,000 this morning after starting with $100,000 seed money. The biggest lesson I learned was follow the system and follow the rules. It's really that simple. But at some point, whether you start with $10,000 or $25,000, you have to jump in and implement the system. There's been a lot of comments on Facebook this last week that I got involved with people discouraged because they've had some losing 11-day trades and they started questioning the system. And they said, well, Ron does it this way because he has to, because it's his system. And that's where I kind of jumped in and said, no, follow the system. It's that clear cut. And you can't base everything on the results of just the last couple of weeks or the last month. Commit, put a year in, put your money in, follow it for a year, and then make your determination. And I have to believe, because Ron, your historical data shows 60, 65, 70% success rate on the trades. It's right. Exactly what I'm tracking at. I see the exact same results as Ron has seen. So I know it works, and if you're a numbers person and just play the numbers, if you're winning 75% of the time and losing 25, you're going to make money.
If you want to be like Bruce and many, many others, the best way to learn this system is to register for our course called the Options Paycheck. It's designed to take you step by step through the system that you need to generate safe, consistent income. The outcome that you will get from this course is a complete A to Z system to generate income from option trades each month. This is the course that Bruce started out with 3.5 years ago. The course guides you step by step through everything you need to use options to generate income. While a base understanding of calls and puts would be ideal, we have had a ton of people take this course without any prior options experience and they still excel. That's because we lay a strong foundation at the beginning, and every step of the way, everything is described in great detail using real-life examples. There's no guesswork here. You will have exact rules to follow every step of the way. This is the most complete, step-by-step course you will find teaching you how to use options for income. As a bonus for registering, you will also get our SPX Paycheck System bonus, which includes a flowchart which maps out every decision for you. If you've already registered, don't worry, you'll get this too. It's a huge bonus. In fact, Bruce said most of the trades that he does are SPX trades. so it's a huge part of his system. Here's what we'd like to do. We'd like to roll up our sleeves and work with you for the next 7 weeks and teach you how to use options to generate income. Even if you've never had success with options, we're going to do this together. If you want to join us, just like Bruce did many years ago, it's an investment of $995. To register, go to www.optionspaycheck.com. Price will go up on Monday, and registration closes on Wednesday, so you've got to act fast. If you have any hesitations, we do offer a money-back guarantee on this course. That's right, you can actually go through the entire course, learn everything that we've got to show you, and if you're not satisfied, we'll give you all your money back. The only thing that we require is that you actually give it your best effort. Come to the classes, do the work, because we know if you do, you'll see the results. But if you're not satisfied that you have learned how to generate income, we'll give you your money back. The last thing I'll leave you with tonight is what Bruce had to say about the course.
The part that I liked most about the course, it was the simplicity of it. The handout materials, and then the couple hours, I think it ran 7 weeks. And then I had the handout materials to review, and then just learning the basics, the do's and don'ts of options trading. And my favorite trade coming out of that, is a bull put spread, and following that. And that's where I got started on simply doing bull put spreads. I never had a chance really to do much bear call spreads because we haven't had many do downs over the last 3 years. But the course is presented well. The course is very simple to follow. Jump in, commit the 7 weeks to doing it, and you'll see the results.
Yeah.